Hello friends, we were into marathon of CA intermediate accounts. We had done till AS 14, now we are supposed to do AS 15. AS 15 chartered means employee benefits, correct? The benefits given by the organization to its employees. These employee benefits can be categorized basically into four types: short term, long term, retirement, termination. Short term, long term, retirement, termination. Short term is this current year or next 12 months. Long term is thereafter, correct? Short term is current year or next 12 months, correct? After that, whatever you give, that is long term. Fair enough? So current year is short term, next year is short term. So long term starts from 12 months from the end of current year. 12 months from the end of current year. Current year ends on this. 12 months from the end of current year. Within 12 months from the end of current year is short term. Within 12 months from the end of current year is short term. After 12 months from the end of current year is long term. And then retirement benefit, that is also known as post-employment employee benefits, correct? And last is termination benefit. Now short-term employee benefits, that means which we are supposed to pay in the current year or in the next year. First one is, suppose salaries and wages, which is accrued and paid in the current year. Accrued in the current year, paid in the current year, that means it is of current years only chartered. Journal entry will become salary to cash. Salary, when salary is accrued but not paid, when salary is accrued but not paid, then charter the journal entry salary to cash. Then the journal entry salary to outstanding salary. First is salary of the current year is paid in the current year. Then salary to cash. Salary of current year but not paid in the current year. Then it is salary to outstanding salary. When salary is not accrued and paid, that means you have paid it in advance. That means chartered, you have paid it in advance, correct? Now, thereafter bonus. Bonus is recognized on the date when condition to receive bonus is met. Generally, you are supposed to stay in the organization for a period of 1 year to receive bonus. What's the journal entry? Bonus to provision, provision to bonus, correct? Now, chartered, this is most important. So, we did salary, we did bonus, and third is leave compensation. This is most important. What is leave compensation? That is paid leave. That is paid leave in the current year. How it is compensated? There are three possibilities. Possibility one, it is not compensated only. That means in the current year you are supposed to take 20 leaves. Suppose in the current year you are supposed to take 20 leaves and you have taken only 15 leaves. So 5 leaves which are unavailed, what will you do with that? That 5 leaves which are unavailed should be compensated. Fair enough, no? Yes. If it is compensated, then how will it be compensated? It can be compensated by giving you 5 days salary in cash, or it can be compensated by giving you extra 5 days leave in the next year. Correct? Now, so accounting for leave compensation. If you are not compensated, then non-accumulating. That means you will not get any compensation. You have worked 5 days extra, that is your problem. So generally we feel that, sir, if they are not compensating, this is not fair. So that is fair only, because if they are not compensating, that means by default you will take the leave, and that is what they want. That if the leaves are granted, please take and take care of your mental health. Now chartered. Second is chartered. Compensated means unused, unutilized or unavailed leave in current year will be compensated next year. How will it be compensated? Vested means it will be compensated in cash. Vested means it will be compensated in cash. Unvested means it will be compensated in leave. Vested means it will be compensated in cash. Unvested means it will be compensated in leave. Employees are entitled to receive cash for unused leave. Employees are entitled to receive cash for unused leave. Then what is the journal entry? Employee benefits account debit to cash, what we have taken, current year's employee benefit, to provision for unused provision for unused leave. Correct? Next year that provision will be paid off in cash. So next year employee benefits, last year ka provision which was not paid. So suppose current year ka employee benefits is 365. We will pay 360 in cash. Sorry, current year ka employee benefits is 365. He has worked 5 days extra, therefore employee benefit should be how much? 370, 365 we have paid, 5 we have not paid, which we will pay in the next year. Sir, again tell, current year mein he has worked for 370 days, 365 plus instead of taking leave for 20 days, he took leave for 15 days, that means he worked for 5 days extra logically. Therefore, current year mein we are supposed to compensate him for 370 days. Bolo chartered, yes or no? Yes, sir. Now, the employee benefits account debit 370, 2 cash, 2 provision. Correct? 370 mein se 365 I have paid, 5 I am yet to pay, that is 2 provision. Next year, I am supposed to pay 365 for next year plus 5 of previous year and I will pay 370. Correct? Yes or no? Yes, sir. Now, you are giving him 5 days extra leave in the next year. You are giving him 5 days extra leave in the next year. So this year he worked for how many days? 370. So you will give him cash how much? 365. Provision 5. Next year he will work for how many days? He will work 5 days less because previous year he had worked for 5 days extra. Therefore in current year he will work for 5 days less. Yes, so this will become how much? 360. Last year ka provision 5, you will pay him 365. I repeat the entire thing. Current year mein chartered, current year mein he was supposed to work for 365 days. He was given 20 days leave. He worked for 15 days. Sorry, he took a leave for 15 days. That means 5 days he worked extra in the current year. 5 days he worked extra in the current year. That means in current year he worked for how many days? 370. So employee benefit expense 370 to cash, 365 to provision 5. Fair enough? Yes. Now chartered provision 5. Next year he will work 5 days less. Why? Because previous year mein he had worked 5 days extra and the business is telling that next year, organization is telling next year you have to work 5 days less. So he will work for how many days? 360. 5 days he has worked less. That last year ka provision cancelled in the current year, but you will pay him how much? 365. Correcta, incorrecta? Correcta. Now chartered. Shall we move ahead? Yes, sir. This is your short-term employee benefits. Now chartered long-term employee benefits. Long-term employee benefits or post-employment benefits. Now understand in this one thing that understand in this, sir. Long-term employee benefits means 31st of March 1990 is my year ending. Next 12 months is my short-term leave. After that my long-term employee benefit starts. And on retirement my post-employment employee benefit will start. That means in both the cases I am supposed to pay long-term. So we study both post-employment employee benefits and long-term employee benefits together. Accounting treatment is one. Fair enough? Yes, sir. Now, post-employee employee benefits or retirement benefits. Post-employment employee benefits or retirement benefits. There are two types of post-employee employee benefits or retirement benefits. Defined contribution plan, defined benefit obligation. Defined contribution plan में the organization has promised you कि भाई at the end of 1 year you will be compensated, sorry, at the end of 5 years you will be compensated 10 lakhs, or at the end of retirement you will be compensated 10 lakhs. No. Defined contribution में what happens? Employer tells the employee that beta, every month I will contribute to your retirement fund or long-term employee fund 5,000. So he will go on contributing 5,000 every month. Suppose that fund runs for 5 years. So every month if I am contributing 5,000, 1 year how much I have contributed? 60,000. Correct, sir. 5 years how much I have contributed? So 60,000 into 5, 3 lakhs. Very good. So employee should get how much? Sir, 3 lakhs. If employee should get 3 lakhs or more than 3 lakhs? So logically more than 3 lakhs because 5 years ka interest also. Exactly. Now, if he gets 3 lakh 5,000, that is employee's luck. If employee gets 3 lakh 50,000, that is also employee's luck. If employee gets 2 lakh 90,000 also, that is also employee's luck. Employee cannot come to employer and say, nah, you told me that you will give me more than 3 lakhs. No, I will say, I know. I did not promise anything. I told that on your behalf, I will keep on contributing 5,000 every month. On your behalf, I will keep on contributing 5,000 every month to employer, to your fund, which I did. That is known as defined contribution plan. These are retirement benefits under which entity pays fixed contribution into a third party fund on behalf of the employee and will have no further obligation to any amounts to employee post employment in any situation. Example, provident fund. That means company will go on depositing to PF and PF will pay to the employee on retirement. Correct? What is the journal entry? Defined contribution expenses to defined contribution payable, then payable to paid. But if it is payable after 1 year, then when accrued expenses to payable, then interest to payable because 1 year ka interest, and then paid, defined contribution payable to bank. So if it is paid within 1 year, expense to payable, payable to bank. If it is beyond 1 year, then payable to expense to payable, interest to payable, then payable to bank. Am I clear? Remember, expense as well as interest, both are treated as employee benefits. Interest is not treated as finance cost over here. Interest is also treated as borrowing cost. Don't forget all this. For example, annual salary of Mr. Ram is 1,65,000 for the year ended 31st of March 90. Employer contributed 8% of the salary to PF. The amount of PF deposited, discounting rate is how much? 10%. Annual salary of Mr. Ram is how much? 1,65,000. Employer contributed 8% of the salary. So 1,65,000 ka 8% I am supposed to contribute. Correct? 1,65,000 ka 8% I am supposed to contribute. Correct? I will contribute 1 year before. तो उसका प्रेजेंट वैल्यू निकालेगा. $1,65,000 का 8% is how much, you know? 1,65,000 का 8% is 13,200. This 13,200 का present value. Correct? That is 12,000. Yes, sir. No, sir. No. That comes to how much? 12,000. So I created 12,000, then I am paying after 1 year. So interest to payable and payable to bank. 1 year ka interest. You understood? Yes or no? So 13,200 I am supposed to pay. But that 13,200 I am paying after 1 year. So I found out 13,200 ka present value. Discounting rate is how much? 10%. So 13,200 into present value factor 10% 1 year. So that will become 13,200 into 0.091 is equal to 12,000. So I pass the entry expenses to payable. Sorry. Expenses to payable 12,000. Am I clear? And then interest, 1 year ka interest to payable to bank. Defined benefit obligation. Now charted in defined benefit obligation. In defined benefit obligation, I have told employee that I will pay you 5 lakhs after 5 years, suppose. That is defined benefit obligation where I have promised employee that I will pay him 5 lakhs after 5 years. So every year, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Every year, 1, 2, 3, 4, 5. This is my 5th year. Over here, if I save every year 1 lakh, I am supposed to pay him 5 lakhs after 5 years. Yes. But logically think, if I am supposed to give him 5 lakhs every year, 5 lakhs after 5 years, then I need to save 1 lakh every year or less than 1 lakh? Less than 1 lakh. Why? Because on the first 1 lakh, I will earn interest for 4 years. On second 1 lakh, I will earn interest for 3 years. Third 1 lakh, 2 years. Fourth 1 lakh, 1 year. And last 1 lakh for no interest. So, last 1 lakh, I will save 1 lakh only. Second 1 lakh, fourth year ka, I will discount it for 1 year. Correct. This I will find out. Discounting I will do it for 2 years. Discounting factor for 3 years and discounting factor for 4 years. So I will find out the present value. Last year ka jo hai, there is no interest. So full 1 lakh. Fourth year ka whatever I am supposed to save, I will discount it by 1 year because after 1 year it should become 1 lakh. Today it should be, suppose rate of interest is 10%. So present value factor is 0.9091. So I multiply 1 lakh. So 90,910. So if I save 90,910 in the fourth year, in fifth year it will become how much? 1 lakh. Similarly 0.8264, that is 82,640. If I save 82,640 in the third year, after 2 years it will become 1 lakh. Correct? Into 0.7513. If I save 75,130 in the, second year, it will become 1 lakh in fifth year. 0.6209, that is 62,090. If I save this much, then in fifth year it will become 1 lakh. Correct? Now, so defined benefit obligation. In this case, the employer has to pay a promised fixed amount to its employee known as defined benefit obligation, DBO, after n years of service. Example, gratuity. Yeah, are you all understanding? Yes or no? Kuch to comment. In DBO is to be recognized over the remaining period of service, that is n years, which will be paid on retirement. So I am promised him X amount on retirement. That X amount is known as gratuity, pension, whatever. Let's call it gratuity. DBO is to be recognized over remaining period. That means whatever period is left till retirement. Fair enough. Now, amount of gratuity on retirement after 5 years of service is suppose 5 lakhs. Therefore, we can say DBO is 5 lakhs. What we are supposed to pay him after 5 years is known as DBO. In reality, you can call him gratuity, you can call him bonus, you can call it silver jubilee bonus, you can call it pension, whatever you want, you can call it. But in accounting term, whatever we are supposed to pay him after on the retirement is known as DBO, or after a fixed period of time, that is known as DBO. So annual DBO will become 5 lakhs divided by 5 years, 1 lakh. But am I supposed to save 1 lakh every year? No, present value of 1 lakh. Every year, employee needs to save present value of annual DBO known as current service cost. Present value of 1 lakh. Correct? So, how much I am supposed to save? CSC. So, CSC which I will save is payable. So, this is my expense. This is my expense to liability. Why? Because I am supposed to pay it after 1 year. This liability and PL to expense. Correct? This expense, the money which I am saving is payable after 5 years. Yes. The expense to liability, and this I am saving from profit. So PL to CSC. Correct? Whatever money I am saving is my expense. Why? And it is an expense. The money which I am saving from my profit is my expense. Why? Because I am saving for my employees. And that is paid or payable? Payable when? On retirement. So, it is a liability. So, expense account debit to liability. Correct? Every year it will keep on increasing with interest. This PVO DBO will compound every year, unwinding of interest. This PV DBO will keep on increasing every year because of interest. So, interest to PV DBO, PL to interest. On retirement, this PV DBO will be paid to employee, PV DBO to bank. Correct? Now, understand. A Limited made a DBO plan payable after 6 years of service. Amount of gratuity will be 30%. Amount of gratuity will be 30% of service. Okay. Last drawn for each completed year of service. 30% of salary last drawn for each completed year of service. So, what is the amount which you are supposed to pay, chartered? What is the amount which you are supposed to pay? Okay, Arya. What you are supposed to pay? You are supposed to pay 30% of the salary for each completed year of service. How much you are supposed to pay? Salary last drawn into 30% into completed years of service. This is the amount which you are supposed to pay him on retirement. Yes, and retirement is coming after how many years? 6 years. Acha. So, salary last drawn into 30% into 6 years. So, first I need to calculate what? Salary last drawn. Yes. Then I need to calculate what? DBO. DBO is the amount payable after 6 years. Then I will calculate annual DBO. That means amount which you are supposed to save every year. Then I will calculate present value of it. Yes or no? So, first I will calculate salary last drawn. Salary today is how much? 40,000. Escalation rate is 8%. That means every year salary will increase by 8%. Rate of discounting is 10%. So, current year ka salary is how much, chartered? 40. It will increase by 8%. Second year, third year, fourth year, fifth year, sixth year. Correct? 40,000 is the salary. It will increase by 8% second year. First year it was 40. Second year it will increase by 8%. Increase by 8%. 8%. 8%. 8%. So 5 times it will increase. 6 years mein. So this is the salary last drawn. Now gratuity will be salary last drawn into 30% for each completed year of service. How many years of service completed? 6 years. So salary last drawn into 30% into 6 years. This is the amount which I have promised him that I will pay on retirement. Correct? Annual DBO 17,632. That means every year I will save 17,632, 17,632, 17,632, 17,632, 17,632, 17. Sixth year mein whatever I save, that will be full amount. But fifth year mein which I save, that will carry interest of how many years? 1 year. So I have present value it to 1 year, that is 62,029. into 0.9091. After 1 year interest, it will become 17,632. Similarly charted, fourth year, mein whatever it was there, I have discounted for 2 years. Why? Because in 2 years, discounted for 2 years means into 0.864, I got 14,572. On this, if I add 2 years interest, it will become 732. Similarly, third year wala, 3 years. So 3 years का interest के बाद, second year wala, fourth year, first year wala, fifth year. But obviously this way you cannot show in the examination. The examination how will it? Year, annual DBO, interest for 0 years, last year, interest for 1 year, 2 year, 3 year, 4 year, 5 year. So when you are calculating discounting factor, you will go from year to year. 0 is 1, 1 year ka discounting rate, 2 year ka discounting rate, 3 year ka discounting rate, 4 year ka discounting rate, 5th year ka discounting rate. Why 1 year ka? Because you will get interest only for 1 year, you will get interest for 2 years, interest for 3 years, interest for 4 years, interest for 5 years. So every year ka CSC you found out. This is the money which you will save every year. This is the most important thing. This is your current service cost. Fair enough? Yes. So sir, first I will calculate salary last drawn, then I will calculate the amount payable, that is salary last drawn into percentage into completed year of service. Very good. Sir, then I will calculate annual DBO, that is amount which I am supposed to save without calculating its present value. Correct. Then I will find out CSC, step 4 में. CSC में chartered, I will present value it. I will present value it to how many percent? I will present value it. How to find out present value? Last year में 0 interest, 1 year का interest, 2 year का interest, 3 year का interest, 4 year का interest, 5 year का interest. Correct? तो present value factor इसका तो 1, present value factor for 1 year, present value factor for 2 years, you got CSC. This is the liability sheet. First year may I save this much. This is my closing balance. On this I will get interest. Again I will save closing balance. This closing balance will become next year opening balance. On this I will get interest. Again I will save. Like that I will keep on doing. Correct? Yes sir. Understood? First year mein CSC, closing balance. On that closing balance I will get interest. Interest pay I will again save for the next year, closing balance. Now chartered. Ledger. First year I save closing balance. Second year on that interest again I save closing balance, opening balance, interest, save closing balance. Last year I will pay it off. Correct? Now chartered. Now chartered. Changes in actuarial assumption. If there is a changes in discounting rate, if there is a change in discounting rate, first year ka discounting rate is 10%, second year ka 9%, then what you are supposed to do? You are supposed to calculate, remember, step 1, salary normal, step 2, gratuity normal, annual DBO normal. CSC mein you are supposed to calculate CSC both at 10%, at 9%. Why? Because when you started, no, you thought it is 10% only, so you calculated CSC for 10%, so first year ka CSC 10%, then 9%. Liability sheet you will prepare as per revised data only. Please don't forget, liability sheet you will prepare as per revised data only. Okay. So opening balance, revised data is 1683. So 1683. Closing balance, opening balance, interest, again second year ka CSC closing balance, it will go on. But when you are preparing PVDBO chartered, you have to be ekdam full mind on, because your interest rate changed from second year. Your interest rate changed from second year. Opening balance you started with, first year you started with old CSC. Yes, that is your closing balance, that is your opening balance. Now, second year rate had changed to 9%. So we are in second year only. So you will calculate on the basis of 9% of this. You will get this. Second year mein you are saving new. You are saving as per new. So new. And your closing balance also has to be new. Oh. So this was old. Rate of interest new. You are saving new. Your closing balance new. It will not match. And the difference will be transferred to actuarial gain or loss. You all understood? Please reply thumbs up, thumbs down. Understood, not understood? Tell. Now, correct? So you start with old, second year mate is changed, the opening balance is old, but rate of interest has changed in the second year, so interest you will calculate on the basis of old rate only. Sorry, interest you will calculate on the basis of new rate because second year mein rate of interest has changed. So new rate but on the old balance. Amount you save is new, your closing balance is new, this account will not tally, the difference will go to PL, that is known as actuarial gain or loss. Since it's on the credit side, your liability mein credit side PL means liability is increasing, loss. If it was on PL, it was on debit side, liability mein PL is on the debit side, that means liability is decreasing, it's a profit. Correct, chartered? Past service cost, that means increase in gratuity. Increase in gratuity because of increase in gratuity percentage. Increase in PVDBO balance due to increase in promised gratuity. Gratuity increased from 2% to 3%. Correct? Yes. Now, chartered, understand, this is the date of change. This is the date we announce that gratuity from 2% it has become 3%. And we told the period of service is 5 years. So today there will be some people whose 5 years will end, is coming to an end. Yes. So their gratuity will increase, but 5 years are over. There are some people whose 5 years will start from today. Yes. So there are some people whose 5 years are over, but their gratuity has increased. That is known as vested gratuity. Matured. Vested means matured. There are some people whose entire 5 years are left. Bolo na. That is unvested gratuity. Immature. And there are some employees whose some period is over and some period is yet to be over. Yes. For some employees, service period is over on the date of change, vested. For some employee, service period is not over as on the date of change, unvested. For some employees, some is over, some is not over. So when you are increasing, it is past service cost because your liability is increasing, it's an expense, you debit to PVDBO. If it is vested, you transfer it to PL. If it is unvested, this PSC, you transfer it to balance sheet, and like this is vested, you will transfer it to PL immediately. This 2 years are vested, 3 years are unvested. So 2 years ka you will transfer it to PL immediately. 3 years ka you will transfer it to balance sheet. Whatever you transfer into balance sheet, you will write off to PL every year 1/3, 1/3, 1/3 over a period of 3 years. Hey, samjha. Suppose you are passing the entry PSC to PVDBO, it is increasing by 500, 500, 200 is going to PL immediately. 200, 200. Correct? But chartered 500, remaining 200 will go to PL over a period of, remaining 200, 300 will go to PL over a period of 3 years. So every year you will transfer 100, next year mein 100, third year mein 100, every year 1/3 karke transfer. Am I clear? On this there are no questions as such. Curtailment, matlab stop. Curtailment matlab stop the gratuity. Ayyo, stop the gratuity means today you stop the gratuity. When you stopped, those whose entire service period was over, you paid off to them. Those whose service period was not over, you did not pay, you transferred it to PNL. Correct? Understood? So minimum service period for receiving DBO is over. You paid it off PVDBO to bank. Whatever you did not pay, you said I will not pay in future PVDBO to PL because that is your gain. Am I clear? Now, understand chartered. Step 1 में you will do what? Calculate salary last drawn. Then you calculate DBO. DBO means the amount which you are supposed to pay after 5 years. That is salary last drawn into percentage into completed years of. Then number 3, CSC. Sorry. Number 3 you calculate annual DBO. Annual DBO में what you will do? DBO divided by completed year of service. You will get one amount. Correct? Number 4, calculation of CSC old and new if there is a revision. Achha. Then you will prepare liability sheet with revised. Correct? So opening balance, add interest minus plus CSC is equal to closing balance. Correct? This you will do it for full period. Number 6, you will prepare PVDBO account by CSC old to carried down by balance brought down by interest old. I am assuming the change has not taken place in the second year. Old by CSC old. Correct? To balance carried down by brought down by interest new rate of interest into opening balance by CSC new to balance carried down new. Difference in this third year ka account is equal to PL chartered. Fair enough? Yes, sir. Correct? Now, again brought down. So this is your changes in actuarial assumption. Then charted your PVDBO opening balance by PSC. Correct? By PSC by interest by CSC to carried down. It will go on. Yes or no? This PSC vested portion you will transfer it to PL immediately, unvested portion you will transfer it to balance sheet, and balance sheet it will come to PL every year. Correct? Yes, sir. Now chartered. balance brought down. Correct? By now charted to bank. Whatever you have paid, what you have not paid, you transfer it to PL. This is curtailment. Correct? तो फर्स्ट ईयर इज नॉर्मल, सेकेंड ईयर नॉर्मल, थर्ड ईयर में एक्चुअल चेंजेस में क्या होगा? एक्चुअल चेंजेस में ओपनिंग बैलेंस होल्ड, इंटरेस्ट, न्यू रेट ऑफ इंटरेस्ट इनटू ओपनिंग बैलेंस, न्यू रेट ऑफ इंटरेस्ट इनटू ओपनिंग बैलेंस, new CSC, new closing balance, the difference in this account will go to P&L. Next year में there is a change in PVDBO, PVDBO increased, so you wrote by PSC. This PSC you will transfer it to PL if it is vested, if it is unvested you will transfer it to balance sheet, and little every year it will go to P&L. Correct? Yes. Last year में charted, if it is curtailed or stopped, then whatever you have paid to bank, whatever you have not paid is to P&L. Am I clear? Yes or no? Yes, sir. That is your PVDBO. Now, whatever we are saving that we invest. Where do you invest? Plan assets. Whatever you are saying, you invest in plan assets. That is basically investment in fixed income securities. So at the time of retirement, at the time of retirement, are you listening, Pa? Ah, sir, listening. So at the time of retirement, what happens? You sell that plan assets. You get money. With that money, you pay off your employees. Achha. So whatever you save, that PVDBO you invest. That investment is known as plan assets. So whatever you are saving every year, that is known as PVDBO, and that amount you keep on investing every year in plan assets. Wonderful. Now what happens? Now chartered, what happens when there is retirement? You sell the plan assets, get the money, and that money say you pay off your PVDBO, retiring employee. Correct? Yes, sir. Now we are going to learn accounting for plan assets. Investments of PVDBO money in government securities is known as plan assets. Plan assets account is prepared at fair value. Okay. To balance brought down, to bank, whatever you are contributing, that means whatever you are saving, that you are contributing, to return, that is your interest, to actuarial return, that is your unrealized and realized gain. This is your interest, and this is your realized and unrealized gain. Realized means profit on sale, and unrealized means your investment from 10 rupees. In your Zero, the app, it is showing 12 rupees. So 10 rupees ka investment, 12 rupees, you are feeling very happy. Wow, wow. 2 rupees unrealized gain, that will come over here. By bank, you sold investment, that is known as benefits paid. Why did you sell investments? To pay off your employees. That is known as benefits paid. By balance carried down. On opening balance, you will calculate interest for the whole year. And for contribution minus benefit paid, that is alpha minus beta, you will calculate interest for half year. Suppose 100 rupees you have contributed. 20 rupees you have sold. So net investment increased by how much? 80 rupees. On that 80 rupees increase, you will calculate interest for only for half year. Why? Because the date is not known. Acha. Am I clear? Then return plus actuarial gain. Return plus actuarial gain is known as actual return. So there is return, which is your interest. Then there is actuarial gain, that is realized and unrealized gain. Return plus actuarial return is equal to actual return. Correct? Yes. 1 minute. Now charted. Opening value of plan assets is how much? 1 lakh. Benefits paid 19,000. Contribution 49. Plan assets का closing value 1,50,000. Fair market value closing. PVDBO balance I am not interested because I am preparing plan assets. Actuarial loss in PVDBO, that also I am ignoring. Why? Because I am interested in PVDBO, sorry, plan assets. Actual loss in PVDBO, that will impact my PVDBO account. Company made the following estimates. Interest and dividend I will earn 9.25%, realized plus unrealized gain 2%, fund admit cost 1% expected, rate of return is equal to 10.25% for whole year. 10.25% for whole year is beta 5% for half year. How, sir? 100 plus 5, 105. 105 per, again 5% interest is 5.25. So 110.25. So 5% for full year, half year. So 5%, 5%. Full year ka interest from 100 to become 110.25, that means 10.25 interest. Correct. 100 rupees compounded at 5% half yearly. So 100 became 105. Yes. 105 per again 5% interest. Yes. So it became how much? 5.25. Total became how much? 110.25. So 100 say 110.25 is how much? 10.25. Correcta, incorrecta? Correcta. Are you understanding? Yes, sir. Now chartered. Ready? Yes. So 10.25 for the whole year is half year ka 5%. So opening balance per full year ka interest and 48 minus 19. Net interest, net increase is how much? 30. On that 30 will calculate half year ka interest. So balance you get as the actuarial gain. No. Actuarial gain plus actual gain is equal. Actuarial gain plus return is equal to actual gain. This is your actual. Correct? Yes, sir. Now, this is how the relation. 100 plus 5 plus 105, 105.25, that. How to calculate? Half year ka interest. I is equal to 1 plus E by 100. E is full year ka interest, 10.25 minus 1. Now chartered. Suppose PVDBO is 2000. PSC is 1500, which is to be written off, and plan assets is 12,000. Now you are cancelling the plan. Once you cancel the plan, PVDBO will go and PSC will also go, because PSC is already included in PVDBO. You are just supposed to write off over a period of 3 years. But obviously, if you are closing your PVDBO, you will write off PSC immediately. So what will be the journal entry? 100% planned is curtailed, stopped. PVDBO 2,000, 20,000 gone. PSC 1,500 gone. 18,500 is gain on settlement. Fair enough? Yes. But 20% of the plan is curtailed. Then 20% of 20,000, 4,000 gone. PSC 20%, 300 gone. If you want, you can pass separate entries also. Your PVDBO gone, so PVDBO to PL 2020. Your PSC will also go. So PL to PSC. So this is your liability going gain. This is your asset going loss. Net gain is how much? Same thing. So instead of these two entries, we combine and pass PVDBO to PSC to PL. PVDBO 4,000, PSC 300, PL balancing figure 3,700. So how much PVDBO is left? 16,000 minus PSC 1,500 minus 300, 1,200. Plan assets 12,000 is left, so remaining is what, 2,800. Correct? Yes or no? Yes, sir. Now chartered. So what you are supposed to learn in this entire drama? First chartered, you learned short-term employee benefits. Correct? Then you learn short-term employee benefits mein you learn salary, bonus, leave compensation. Correct? Then you come to long-term and defined contribution plan, defined benefit obligation. Fifth, plan assets. That's it. You concentrate on this 4 and you are done. Correcta, incorrecta? Correcta, chartered. So with that we come to end of employee benefits. Now chartered, we start with borrowing cost. Now borrowing cost पे concentrate very carefully. As soon as you hear the word borrowing cost, what comes to your mind is interest. Whenever there is interest, there has to be loan. So first let us understand what is borrowing cost. It is not only interest, it constitutes 5 things. How many things? 5 things. One is interest and commitment charges, that is processing cost. Number 2, now 100 rupees ka debentures you issued at discount, you will redeem at premium. Let us put it this way, 100 rupees ka debentures I issued at discount. That means I gave it to you for 90 rupees. That means I gave you debenture, you gave me 90 rupees. Bolo haan sir. Now chartered, that debenture I will redeem at 105. So you gave me how much? 90. I will give you how much? 105. Don't you think 90 rupees I have taken from you, I am returning you 105, extra 15 is premium only? Yes sir. So chartered, discount and premium on redemption is also borrowing cost. Fair enough? Yes sir. Second, finance charge on lease, that is also borrowing cost. ठीक है. Other cost for arranging loan or borrowings, commission or brokerage, legal charges, upfront fee are all borrowing cost. So borrowing cost means number 1, interest and processing. Yes. Number 2, discount and premium on issue and redemption. ठीक है. Number 3, finance charge on lease. Okay. Number 4, other cost for arranging loan. ठीक है. Number 5, forex loss up to a certain amount. I have taken a loan from abroad. Correct. When I took the loan, I took $1,000 ka loan. Correct. That time the rate was how much? Dollar ka 40. At year end, the dollar ka rate has become 45. So I am losing 5,000 also, no? I took a loan of how much? $1,000 when the dollar rate was how much? 40 rupees. So ultimately how much money I got? 40,000. At the end of the year, when I want to repay the loan, this $1,000 will cost me how much? 45. So I have to repay 45,000. So don't you think because of exchange rate difference I am suffering a loss of 5,000? Yes. So people say this 5,000. People say that this 5,000 should also be treated as borrowing cost. मैंने कहा ना बापू ना. Entire 5,000 you cannot treat as borrowing cost. Standard told up to a certain amount it will be treated as borrowing cost. That is forex loss up to a certain amount of forex loan. Acha. So what is borrowing cost? You understood? Yes. What is the treatment of borrowing cost? Listen. If borrowing costs are incurred on qualifying asset, then borrowing cost should be capitalized. Acha. If borrowing costs are incurred on capital asset chartered, then borrowing cost must be capitalized. That means borrowing cost ka journal entry is borrowing cost to bank or outstanding. Correct? If borrowing cost is on qualifying asset, then it will be capitalized. That means you will transfer borrowing cost to asset. But if borrowing cost is on non-qualifying asset, then you will transfer borrowing cost to P&L. Any problem? No, sir. No problem. Till here everything is fine? Yes, sir. So, treatment of borrowing cost you understood. So, if borrowing cost is incurred on qualifying asset, then it should be capitalized, else it should be charged to P&L. What is qualifying asset? Qualifying asset is if borrowing cost is spent on purchase, construction or production of qualifying asset. If borrowing cost is incurred on purchase, construction or production, or we can say ACP also, acquisition, construction, production. Acquisition, construction, production of a qualifying asset. Qualifying asset means any asset which takes more than 12 months to be in ready to use condition. Oh my God. Acquisition, construction, production of an asset which takes more than 1 year to be in ready to use condition, then such asset is known as qualifying asset. Achha. So, you understood how to treat borrowing cost. Now, charted, third is how to calculate borrowing cost. So, logically, second is when I say how to treat borrowing cost is nothing but recognition. How to calculate borrowing cost is nothing but measurement. To calculate borrowing cost, we have divided borrowing cost into three parts. One is specific borrowings, one is general borrowings, and one is foreign borrowings. Specific borrowings means, chartered, we have borrowed money specifically for the purpose of acquisition, construction, production of qualifying asset. Then chartered actual interest or actual borrowing cost minus borrowing cost minus income on investment on idle funds. That means this is your borrowing cost. Let's understand. 1/4/90 my year starts. 31st December 91 my year ends. I took a loan on this date. Specific borrowings I took it on 1/4/90. I started using the loan from 1/7/90. Correct? So, actual borrowing cost is for how many months? 12 months. Out of those 12 months, 3 months the fund was idle? Yes. During this idle time, I invested the fund somewhere else? Yes. From there, I generated interest? Yes. That should be subtracted. Am I clear? Yes. That is what it is all about. Borrowing cost generally, specific borrowings. Any loan taken specifically to be used for purchase, construction or production of qualifying asset. Calculation of borrowing cost. Specific borrowings into rate of interest into period for which loan is borrowed divided by 12. Period for which loan is borrowed in the current year. That means basically I am talking about actual borrowing cost includes specific borrowings into rate of interest into period for which loan is borrowed in current year, actual loan, less income from temporary investment in the borrowed funds. Fair enough? Now, like for example, X Limited took 12% loan of rupees 1 lakh for construction of factory on 1/1/90, but the construction started from 1/4/90. For 3 months, that is Jan, Feb and March 90, loan of rupees 1 lakh was invested in liquid, which yielded a quarterly interest of 3.5%. Year ending. So, I have taken the loan on which date? 1/1/90. Year ending is how much? 31st December 90. That means I have used, in the current year, I had loan for entire 12 months. So, 1 lakh per 12%, 12,000 is the interest which I am supposed to pay. This is my actual borrowings less. On that 1 lakh, for 3 months, I will earn interest of 3.5% chartered, that is 3,500. Correct? So ultimately my borrowing cost will become 8,500. Yes sir, no sir. General borrowings. Now this you need to understand. General borrowings means I had borrowed money and that money I am using it for construction. Now whatever I am saying, listen to these three situations. Situation 1, situation 2, situation 3. I have got asset 1, general borrowing, general borrowing, general borrowing. I have got 3 general borrowings. From which general borrowing I am using money? Am I able to say this? No. Rather, will I be able to say that I have borrowed from which general borrowing I am using the money? Will I be able to say? No. So, I will use money on average borrowing rate. Correct? I'll assume that I am using money from all 3 and rate of interest I'll take average rate, weighted average rate. Okay? Yes sir. Weighted average rate. First thing you understood. So you cannot match. You don't have to do one-to-one plotting of borrowings and asset. Even if there were 3 assets also, you cannot say that this loan is with this loan is with this loan is with this until unless it is specific. It is general borrowing. That means all the 3 loans are for all the 3 assets. And how will you calculate interest on the basis of average rate? Fair enough? Yes. Now chartered, Krishna, good morning sir. Sir, I know that this is class for Jan 26 with question practice. No, this is just a revision. I will come out with the revision videos with question practice sometime later. This is for people are writing in Jan 26, not with question practice. It is just a revision of concept. Okay, Vishal. Now chartered. Second, suppose there is asset 1, construction over, or rather construction has started going on, and then we took a loan, general borrowing. Will this loan ka interest be capitalized? Yes. Suppose chartered, we have taken a loan. After long time later, we started the construction. Will this loan ka interest capitalized? Yes. Because we say whatever loan we have taken for construction of asset only. Why? Because over here asset was there. Yes. Correct? Then we used that money, we used cash. Then we took general borrowing for running the business. Then we say, for running the business, we could have used this cash. Correct? No? Yes. But since we were constructing asset, we have used the cash in asset, therefore we have taken borrowings. So this borrowings is there in the business because of asset only. Yes? No? Yes. Now chartered, this is known as, so you don't have to see when was the borrowing taken, before, later, afterwards, nothing. If there is a borrowing, if there is an asset, shut your brain, capitalize. So general borrowing includes loan, debenture, bond, working capital, borrowings, etc., which are wholly or partially used in qualifying asset. Now chartered. Borrowing cost to be capitalized. Amount into period by 12 into rate of interest. Amount into period by 12 into rate of interest. This is how you calculate normally the interest. Amount is what? The amount which you have spent on the borrowings. Amount which you have spent from the borrowings into your asset. So A stands for amount spent on constructing the asset out of borrowings. B is period, C is rate of interest. Amount of expense done on qualifying asset. For time being, you remember this only. ठीक है? Period. Start date, end date. Start date is later of borrowings taken, expenses incurred or development started. Start date is later of borrowings or expenses or development started, whichever is later. Correct? Borrowings taken, expenses incurred on qualifying asset, development activity has started. Now, end date, that is cessation date. If the qualifying asset is ready to use or loan is repaid, whichever is earlier. So start date is later, start date is later of loan taken, expense or active development started. End date is earlier of asset ready to use or loan repaid. Common sense. If you have stopped the work in between, which was within your control, then that is abnormal loss. Correct? But if you have stopped the work in between due to some abnormal activities which is not within your control, that you will remove. So abnormal loss of time, avoidable, negligible, borrowing cost is not capitalized. Normal loss of time, unavoidable, high water level strike, borrowing cost is capitalized. Suppose 3 months we could not do work. Why? Daughter's marriage, Diwali celebration, Holi celebration, or 3 months we did not work because of her laziness. All this period is unavoidable. All this is avoidable. This is known as abnormal loss of time. This was avoidable. I could have avoided. Negligence की वजह से borrowing cost will not be capitalized for this 3 months. But I had to stop work because of heavy rains, water level had risen, COVID, all this were within my control, not within my control. Then borrowing cost capitalization will continue. So capitalization will stop if I have stopped the work because of my negligence. But capitalization will not stop if the work has stopped due to some external factors which are not within my control. Are you understanding? Yes, sir. Borrowing cost will stop capitalizing if it is because of your negligence. Borrowing cost will be continues to be capitalized if work has stopped due to some external factors which is not within your control. Yes. It is rate of interest. So, amount means what? Amount you have spent on qualifying asset. Period means start date, that is later of date of loan taken, expenses incurred, active development started, whichever is later. End date, earlier of asset ready to use or loan repaid. Less suspension. The suspension period में you will not capitalize if the work has stopped due to your negligence. You will continue to capitalize if work has stopped due to some external factors which are not within your control. How to calculate rate of interest? That is weighted average rate of interest. It is also known as rate of capitalization, weighted average interest. Amount of interest on all general borrowings, amount of general borrowings for months used divided by 12. Now I am doing this capsule. See over here, how will you calculate? See very carefully. 12% of 1 lakh, that is 12,000, plus 15% of 2 lakh, that is 30,000, plus 16% of 3 lakh, that is 48,000, divided by 1 lakh plus 2 lakh plus 3 lakh into 100, whatever you get. This is simple. Look at this capsule charted. I have taken this loan on 1190, so this was there for how many months? 12 months. 1,490, that means this loan, if the year ending is 31st December, that means this loan, 1,490 wala loan was there for how many months? 9 months. And 1,8, if I have taken loan, 1,8 if I had taken loan, then this loan was there in the business for how many months? 5 months. So interest, how will I calculate? 5 lakhs into 12%. 5 lakhs into 12% into months, 12 by 12. Either 5 lakh into 12 by 12. Because loan was used for full 12 months. Plus 9% debentures, that means 8 lakhs into 9% into 9 by 12. Over here 8 lakhs into 9 by 12. Why? Because this loan was used only for 9 months. Plus 12 lakh into 15%. But for how many months? 5 months. So 12 lakhs into 15% into 5 months. So over here it will become 12 lakhs into 5 by 12. This is how you calculate the weighted average. Again I repeat, this 5 lakhs for 12 months, this 5 lakhs for 12 months, this 8 lakhs for 9 months interest, and this 12 lakhs for 5 months interest. Correct? Now you read the formula. Amount of interest on all general borrowings. So on this general borrowing, we will calculate interest for 12 months, on this general borrowing for 9 months, and this general borrowing for 5 months. Divided by total amount of general borrowings for months used divided by 12. So this is used for 12 months, this is used for 9 months, and this is used for 5 months. Am I clear? Yes, sir. Calculate borrowing cost to be capitalized. In case of multiple asset, that means you have got more than one asset. Calculation of specific borrowing cost, same as discussed earlier. That is actual borrowing cost minus income from investment of borrowings in idle time. We had calculated over here. Minus income from temporary investment of borrowed funds. That is how you calculate interest on specific borrowings. Calculation of interest on general borrowings. General borrowings into rate of interest into period for which loan is borrowed in current year. This is general borrowings. This is specific borrowings. Now, remember this is multiple asset. Calculate amount of borrowing cost to be capitalized. Nature of asset, qualifying, not qualifying. Cost. Borrowing cost out of specific borrowings, actuals. Borrowing cost out of specific borrowings, actuals, that means directly this amount, or specific borrowings in the ratio of cost. Because if there are more than one asset, that specific borrowing cost should be spread in the ratio of cost of asset. Am I clear? If there are more than one asset, then specific borrowing cost should be spread over all the assets in the ratio. Acha. Borrowing cost out of general borrowings, borrowing cost in ratio of cost, same. If there are more than one asset, general borrowing cost should also be spread on all the assets in the ratio. That will give treatment of borrowing cost. On qualifying asset, it is capitalized. On not qualifying asset, it is transferred to P&L. Acha. So if there are multiple assets, then the total borrowing cost should be spread on all the assets in the ratio of cost. Correct. Thank you for now. Whatever questions have done in my sheet, those questions are only LDR, all varieties only I have done, Vishal. And don't worry, I will send LDR questions. Relax. Now, capsule. So this is how you capitalize. So how do you calculate borrowings cost? In case of multiple asset, calculation of specific borrowing cost. As usual, calculation of general borrowing cost, amount into rate of interest into period divided by 12. But specific borrowing cost and general borrowing cost should be spread. Should be spread over all the assets in the ratio of cost of the asset. Qualifying asset to be capitalized and not qualifying should be charged to P&L. Correcta? Now, in case of single asset, calculation of specific borrowing cost to be capitalized. Specific borrowing cost as usual, calculation of general borrowing cost to be capitalized. See this very, very carefully. Ready? We will do one question on this also. Calculation of general borrowing cost to be capitalized. Rate of capitalization, same as discussed earlier. Rate of capitalization, weighted average cost. Amount of general borrowing cost to be capitalized. Date, expense incurred, months by 12, product. Date, expense incurred into months by 12, product means these two का multiplication. Less the amount of specific borrowings. अच्छा, amount spent out of general borrowings. The ROC as per point, that will give you general borrowing cost to be capitalized. Sir, once again, date, expenses incurred, total, into months by 12 will give you product. Okay, total. Then you will subtract amount of specific borrowings. Okay, then you will be left with the amount of general borrowings. Okay, rate of interest, that will give you general borrowing cost to be capitalized. Total borrowing cost to be capitalized is specific borrowing cost plus general borrowing cost. That will be specific borrowing cost as per step 1, general borrowing cost as per step 2B. This is the total borrowing cost to be capitalized. Total borrowing cost to be capitalized, total amount to be capitalized. This is total borrowing cost to be capitalized. Whatever expense you have incurred plus total borrowing cost is the amount. Correct? Now let's do one question. It will make it clear. Ready? Now, you all please help me also. Mrs. Ayuj started a construction of the building. Actually, I will do one question, which is no. Mr. Ayush started construction of building on 1st of January 2014. It obtained rupees 3 lakhs special loan to finance construction for building on 1st January 2014. Okay. So 3 lakh is a specific borrowings. At interest on 12% per annum. Okay. The company's other outstanding two non-specific loans were, this is general borrowings. Correct? The expenditure that were made. This was made for 12 months. This is made for 9 months. This is July. Made for how many months? 6 months. This is made in December, so it is made for 4 months. Sorry, 2 months. 1 month. January 12, April 9, July, 1st July 6 months and December 1 month. Building was completed following the principles applying A16. Calculate the amount of interest to be capitalized. Pass one journal entry for capitalizing the borrowing cost. Now charted. Step 1. Vishal, this is for you. Step 1. Specific borrowing cost. Specific borrowing cost. How to calculate? Three lakhs into rate of interest is 12%. 1st January. Construction of the building started on 1st January. Into 12% into (12 by 12). The general borrowing cost is 36,000. Step 2. General borrowing cost. General borrowing cost. Now charted general borrowing cost. A, ROC. Rate of capitalization. How do I find that? 11% of 6 lakhs. Six lakhs, 11%, 66,000, then 11 lakhs into 13%, 11 lakhs into 13%, 1,43,000. So 17 lakhs and 209. Correct? Therefore, ROC is equal to 209 divided by 17 lakhs into 100. That is 209 divided by 17 lakhs into 100 is equal to charted 12.29%. Correct? Then B. General borrowing cost to be capitalized. This time it had come in mock paper, this kind of question, which you are supposed to do it by this method only. General borrowing cost to be capitalized. Correct? General borrowing cost to be capitalized. See, date, expense incurred, months and product. Date 1/1, 3 lakhs for how many months? 12 months. So 12 by 12. Then 3,50,000. Which date? 1st April. How much? 3,50,000. into 9 by 12, 3,50,000 into 9 divided by 12, 262,500. Then charted 1st July, 5,50,000 into 6 by 12, 2,75,000. Then 112 को 1,50,000 into 1 by 12. 1,50,000 into 1 divided by 12 charted. 12,500. Total will become 3 lakh plus 262,500 plus 275 plus 12,500. 8,50,000 less from specific borrowings. Specific borrowings is how much? 3 lakhs. They are left with general borrowings, money spent out of general borrowings, 5,50,000. Correct? And that is how much? 12.29%. So minus 3 lakhs, 5,50,000 into 12.29%. 67,595. Correct? Now charted total borrowing cost to be capitalized is how much? 36,000 plus. So this is the money which you have spent in total. Correct? 3 lakhs for 12 months is equal to 3 lakhs, 3,50,000 for 9 months. Understand this, 3,50,000 for 9 months is 262,500 for 12 months, one and the same. How? If I say I have spent 3,50,000 for 9 months or 2,62,500 for 12 months, it's one and the same. You can multiply and check. Oh, So all this is for how many months? 5,50,000 for 6 months, 2,75,000 for 12 months. You have spent 5,50,000 for 6 months. Half of that I have spent for the whole year. Same thing. 1,50,000 for 1 month or 12,500 for the whole year. So 8,50,000 for the whole year minus 3 lakh which I have spent out of general specific borrowings. Out of general borrowings I have spent in the whole year how much? 5,50,000 into 12.29%. 67,595. 67,595 plus 36,000 is equal to amount of interest to be capitalized, 103,595. This is borrowing cost to be capitalized. Amount to be capitalized is the amount which I have spent. How much I have spent? 3, 6.5, 6.5, 3 lakh, 6.5, 11.5, 12, 12, 13.5. So amount to be capitalized is 13,50,000 plus interest of 103,595. Are you understanding? This is the borrowing cost to be capitalized and this is the amount to be capitalized. Amount to be capitalized is total expenses incurred. How much is the total expense incurred? 3, this is 6, 6 plus 5, 11, 11, 12, 13, 13,50,000 is the money spent. Expenses incurred 13,50,000. Interest 103,595. So this is the money spent. This is interest capitalized. Therefore, total amount to be capitalized is 13,50,000. 13,50,000 plus 103,595. is equal to 14,53,595. Now charted journal entries, if they ask you what are you constructing? Building. So borrowing cost to bank 103,595, then building account debit to bank 13 lakh 50 to borrowing cost 103,595, that is 1453,595. Please understand this step 2 very carefully. This is very, very important. You understood? Yes sir, no sir. Yes sir. So if you see, I have created 2 cases. Very, very important. Case 1, in case of multiple asset, calculate the total borrowing cost, spread it in the ratio of cost. Then charted in case of single asset. First you calculate specific borrowing, then you calculate general borrowing. Then you calculate the borrowing cost to be capitalized, 1 plus 2, and the amount to be capitalized. Then journals. You understood? Yes sir. Now charted, you have got foreign borrowings. Foreign. You understand the meaning of foreign? Yes. Why did you take loan from abroad? Sir, I took loan from abroad because loan was available at cheaper rate. That means, get the conditioning right. India mein loan was available at 11%, you went to abroad, you got the loan for 5%. So 5% to interest what you are actually paying, that you will be allowed to capitalize. Are you understanding? 5% interest whatever you are paying, that you will be allowed to capitalize. But chartered 6% interest you are saving also. So correct. So standard says whatever interest you have saved and whatever is your loss, whichever is lower, that will allow you to capitalize. You have saved 6%. So 6% means you have saved 30,000 rupees. If your loss is 24, will allow you to capitalize the entire 24. But if your forex exchange loss is 34, will allow you to capitalize 30. That means we will allow you to capitalize up to 11% if you have taken loan from India. Fair enough? Yes. Now let's apply buddhi. This is the crux. You went abroad. Why? Because India mein loan was available at 11%, abroad mein interest was available at 5%. The 5% borrowing cost, you will be allowed to capitalize. But why did you go abroad? You wanted to save 6%. So standard says whatever is your forex loss means loan in dollars into exchange rate difference. Your starting exchange rate was 40, your end exchange rate is 45. So 5 rupees exchange loss ho gaya na per dollar. So if you had taken a loan of $1 lakh, your starting dollar rate was 40, your ending dollar rate is 45. So you have lost 5 rupees per dollar. So exchange loss is how much? 5 lakh rupees. Oh my God. You took a loan of how much? $1 lakh. When you took the loan, what was the dollar rate? 40 rupees. At the end of the year, what is the dollar rate? 45. So how much extra you are supposed to pay? Rupees 5 per dollar. How many dollars? 1 lakh. 5 lakh ka loss. So you are saying that this 5 lakh let me capitalize. Standard says, Thama, wait madi. Standard says you are saving interest of how much? 6%. Yes. 6% interest save is how much? You are saying 4 lakhs. Your loss is how much? 5 lakhs. Standard says you can capitalize only up to 4 lakhs. Okay. How much is your interest save? 4 lakhs. How much is your interest save? Suppose 6% comes to 8 lakhs. How much you want to capitalize? 5 lakhs. Then the standard says, okay, you can capitalize the entire 5 lakhs. That means lower of interest save or forex loss. अब थोड़ा बुद्धि से काम करता है, ठीक है ना? No steps, just sheer common sense. X Limited has taken a loan of how much? 1 lakh, $10,000 for a specific project at the rate of 5% per annum. 1490 ko loan was this much. This is the same amount if borrowed in India would have cost you how much? 11%. Now, the India mein loan would have been how much? A. Forex loss is how much? $10,000 you had taken a loan. Yes. When you took the loan, what was the rate of the dollar? 45. What is the rate of the dollar now? 48. So 48 minus 40. 48 minus 45. How much it is? $30,000. 30,000 का loss हो गया. Correct? Yes. Now chartered, borrowing cost in India. If you had taken loan in India, you would have taken 10,000 into 45, 4,50,000 का loan in India. Yes. India में rate is how much? 11%. That means you would have paid interest of 49,500. Yes. Total interest on loan which you would have paid in India is how much? 49,500. That means in India you would have been allowed to capitalize 49,500. Bolo हाँ. If you would have taken loan from India, you would have been allowed to capitalize 49,500. Yes. But borrowing cost from abroad. Abroad ka borrowing cost is how much? $10,000. On that 5% is the rate, so $500. $500 you are supposed to pay at the year end is how much? 48. So 24,000 तो borrowing cost abroad का हो गया. India का borrowing cost is how much? Sir 49,500. Abroad का borrowing cost is how much? Sir 24,000. So how much is savings? The savings is 24,500. Your borrowing cost, forex loss is how much? Sir forex loss is 30,000. Therefore, amount of capitalization is equal to lower of these two, 24,500 you will be allowed to capitalize. That means this 24 you will be allowed to capitalize plus this 24,500 you will be allowed to capitalize. That means total you will be allowed to capitalize 49,500. If they ask you how much borrowing cost is to be capitalized, then you will say 49,500. If they ask you how much of forex loss is to be capitalized, then you will say 24,500. I repeat, how much borrowing cost is to be capitalized, then you will say 49,500. But if they ask you how much of forex loss is to be capitalized, then you will say 24,500. Correct, incorrect? Correct. आगे बढ़े. हाँ. This was AS 16. Now we'll go to AS 17. AS 17 segment reporting. Segment reporting में what is segment? What is reportable segment and what you are supposed to report? These three things you are supposed to know. Correct? What is segment? What is reportable segment and what you are supposed to report? Reportable, a segment is any unit, division, department whose operating and financing policies are, which is doing a separate line of business, which is doing into a separate line of business of goods or services, whose operating and financing policies are separate, whose assets and liabilities are separate, whose income and expenses are separate, whose profit can be identified. This is nothing but a segment ka definition. I repeat, segment means anything. Anything means which thing? Any separate line of business of goods or services whose financial and operating policies are different, assets and liabilities are separate, income and expenses are separate, and profit can be identified. Correct? Yes. Now chartered, what is a reportable segment? Reportable segment are those segments which will come in report. Yes. If they qualify a test, they will come under the report. So suppose I have got 10 segments. 4 segments qualify the test. So they become reportable. Yes. The remaining 6 which do not qualify the test are put together as one segment known as others. So there will be A, B, C, D. 4 segments which qualified the test plus remaining 6 segment as others in report. Acha. Sir, what are the tests to be qualified? Listen to me very carefully. There are three types of test. One is materiality, comparability and overall. Rather four I will say. Materiality, comparability, overall and management special liking, management special child. माँ का लाडला. Materiality test means it has three parts. Number one, a segment whose revenue is 10% or more. A segment whose revenue is 10% or more than the total revenue of all the segments put together is a reportable segment. Revenue means internal plus external revenue. A segment whose revenue is 10% or more of the total revenue of all the segments put together. Okay, sir. Number two, segment asset. Any segment whose assets are 10% or more, any segment whose assets are 10% or more, then all the assets put together, it's a reportable segment. Any segments whose profit or loss is 10% or more than the total profit or total loss, whichever is higher, is a reportable segment. Now understand this point. Revenue should be 10% or more. Revenue should be 10% or more. Assets should be 10% or more. Revenue should be 10% or more. Assets should be 10% or more. Or profit should be 10% of total profits or total loss, whichever is higher in absolute terms. Now chartered understand A ka profit, 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 loss, profit, profit. So all the profit 100, 200, so total 300, 310, 310, 430, 460. So 460 is the total profit. 500 plus 200 is how much? 700. 460 and 700, whichever is higher, 700. Any organization any segment whose profit or loss is greater than 10% of 700 is reportable. 700 ka 10% is how much? 70. Whether your profit is more than 70 or your loss is more than 70, you are reportable. More than 70 reportable, more than 70 reportable, less than 70 not reportable, more than 70 reportable, more than 70 reportable, more than 70 reportable, less than 70 not reportable. Okay. So find out total profit, find out total loss. Choose whichever is higher. Higher ka 10%. Any segment whose either profit or loss is greater than that 10% is reportable. Correct? Achha. So this becomes a materiality test. So revenue is 10%. Any segment whose revenue is 10% or more than 10% of the total revenue. Revenue means internal plus external. Asset should be more than 10% of the total assets, and assets should not include deferred tax. Assets should not include deferred tax. Last one is profit. Any segment's results should be 10% or more than total profit or loss, whichever is higher. Correct? Comparative. Now comparative test mein any segment which has satisfied any of these conditions in the previous year is reportable in the current year, whether in current year they have satisfied or not. Achha. That means those who passed materiality test in the previous year will be reportable in the current year by default. Yes. Will they be reportable next year by default? No. Any segment who has passed materiality test in the current year will be reportable next year by default. Achha. Correct? Overall, all the reportable segments ka revenue put together should be greater than 75% of the total revenue. All the reportable segments ka revenue should be greater than 75% of the total revenue. Achha. Revenue means only external revenue over here. Okay. So if it is not 75%, include other segments to make it 75%. Achha. Else segments with highest external revenue should be selected as reportable segments to satisfy the above condition. Materiality mein तीन. Revenue, asset. Revenue means internal plus external. Asset excluding deferred tax. Last is profit, 10% of total profit or loss, whichever is higher. That is materiality. Comparative, those who satisfied materiality last year will be considered as reportable in the current year. Overall, all reportable segments put together, revenue should be more than 75% of the total revenue of the organization. Revenue means external revenue. If it does not satisfy, keep on including extra segments to satisfy the condition. Last, any segment which managements feel that they want to disclose, they can disclose. Acha, हाँ. Manage can otherwise also select any segment as a reportable segment. That is their choice. Now, chartered, see, segment assets does not include deferred tax, advanced tax, TDS, corporate assets. Okay. Segment revenue, segment expense, correct? Now, listen. A segment report will have 7 items. How many items? 7. So, what is segment you understood? Yes. What is a reportable segment which satisfies the test? What is to be reported? 7 items. Segment revenue, segment results, asset, liability, expense, depreciation, non-cash expense. Acha. Result, revenue, results, asset, liability, capex, depreciation and non-cash. Revenue and results, okay. Revenue and results, okay. Segment asset, segment liability, capital expenditure, depreciation and other non-cash. Am I clear, chartered? Yes or no? Yes. So this is your AS 70. आगे बढ़े? Yes sir. AS 18. Related party disclosure. Over here, chartered, basically we are supposed to understand what are related parties. Related parties are those parties on which we have got control directly or indirectly or significant influence. Correct? Parties that are related party, if at any time during the reporting period one party has the ability to control the party or exercise significant influence over the party in making financial and operating policies. So either I should have directly or indirectly control or significant influence over financial and operating policies, then we are said to be related party. ठीक है? RAM Limited has control or significant influence in making financial or operating policies of Sham Limited. That means Ram and Sham are related party. ठीक है? Now control means more than 50% voting rights. And I have got power to compose board of directors. Yes. Significant influence means power to participate. Voting power more than 20%. ठीक है? Subsidiary. If you have control, it is known as subsidiary. Fellow subsidiary का मतलब you know. Associate का meaning you know. More than 20%. Fellow associate means I have got 2 associates. Joint venture. This is a joint venture. It has 2 parties which has control on joint venture. Hero, Honda, Hero, Honda. So Hero also has control. Honda also has control. That is joint venture. Group means parent plus all its subsidiaries. Correct? Relative means spouse, brother, sister, son, daughter, father, mother. मतलब husband or wife, kids, siblings, parents. Kids, sibling, parents and spouse. Key managerial person who has authority and responsibility of planning, directing and controlling. Planning, directing and controlling the activities of what do we say? Organization. Now chartered, what do we understood now? Who is the related party? Any party on which we have control or significant influence in making its financial or operating policies. Fair enough. Then we understood the meaning of control, more than 50%, and we can compose board of directors. Then we understood the meaning of significant influence, voting power more than 20%, and we can participate in operating and financial policy making. ठीक है, 3 parts हो गया. After that 3 parts, we understood what is subsidiary. हाँ, the company on which I have control. Fellow subsidiary. If I have got two subsidiaries, those two subsidiaries are known as fellow subsidiaries. Bhai bhai. Then we understood associates. So we understood related party, control, significant influence, subsidiary, fellow subsidiary. 5. 6, we understood associates. If I have got 20% significant influence, associate. If I have got two associates, bhai associates, brother associates are known as fellow associates. Correct? So I understood 7. Then I understood 8, joint venture. Correct? Joint venture mein I understood chartered, if a company is controlled by two entities jointly, then it is known as joint venture. Those two entities are known as co-venturer. Correct? Yes. Then we understood the meaning of group. Group means parents plus all its subsidiaries. Then we understood the meaning of relatives. Spouse, kids, siblings and parents. Correct? Then we understood key managerial person, who has the authority and responsibility. Authority and responsibility of planning, directing and controlling of all policies. Correct? That is known as key managerial person. These are the definitions we studied. These definitions are not given in AS 18, but if you know this, all the definition, then it becomes easier to understand the standard. Who are related party? Relationships. Number 1. All the members of the group are related party of each other. The parent, subsidiary, uska subsidiary, all the members of the group. So if you come here, you will understand. They are all a related party of each other. Game over. Holding and subsidiary are related party of each other. Holding and sub-subsidiary are related party of each other. Fellow subsidiaries are related party of each other. Done. Examples I have given. In exam also you are supposed to create this diagram and then decide whether it's a related party or not a related party. Am I clear? Yes sir. आगे बढ़े? हाँ sir. मजा आ रहा है? Yes sir. Investor and associates are related. अरे like subscribe कर रहा है कि नहीं? ऐसा मत करो यार. Accident हुआ. फिर भी I have come. Investor and associates are related party of each other. Investor and associate are related party of each other directly or indirectly. I am investor. My associate. Related party, yes. I am parent. I have got subsidiary. Subsidiary ka associate. Indirect associate. Related party. Direct or indirect. Direct means my associate. Investor and associate are related party of each other. Directly means my associate. Indirectly means my subsidiary's associate. So investor and associates are related party of each other. Yes. Holding and subsidiaries associate are related party of each other. Yes. Subsidiary and holdings associate are related party of each other. Yes. Investor and associate subsidiary. Subsidiaries associate, right? Associate subsidiary, no. Fellow associates, no. Associates associate, no. So these are very 3 important. What are these 3? My associate subsidiary, na. My associates associate, na. My fellow associates, na. My associate, yes. My subsidiaries associate, yes. My holdings associates, yes. My associates associate, no. My subsidiaries associate, no. 2 fellow associates, no. Acha. Co-venture and joint venture, yes. But 2 co-venturers, no. Co-venture and joint venture are related party. Acha. Individual, this is very important. Individual and his relatives. Individual and his relatives who are directly or indirectly has control or significance over reporting entity. Individual and his relatives who have a control. So Ram, then his wife Sita, kids Love Kush, siblings Bharat Shatrugna, parents Dashrath, Kaikeyi. So Ram has a control. So Ram and his relatives all are related party. Individual and his relatives who directly or indirectly control or significant influence. So this is control directly, this is control indirectly, this is significant influence, this is indirect significant influence. So I have a control, correct. My subsidiary has a control. Acha. My associate, my subsidiary's associate, all individual I am. तो दिपेश का सब्सिडरी, दिपेश इज सब्सिडरी, दिपेश इज associate, dipesh is subsidiaries associate, same as we did in company. So if you look at 4 and if you look at 1 and 2 over here, instead of company over here it has become individual and is reported. Okay. Now over here it was individual, over here it has become KMP and his relatives are related party of reporting entity. Individual, I have a control over one party and I have got significant influence over another party. I have got control over one and significant influence over another party. These two parties are related entity. I have got control or significant influence. अच्छा, तो 6 understand me, all group members, ठीक है. I have subsidiary, my associate or my indirect associate. अच्छा. 3rd, co-venture, joint venture. Okay. Number 4, relative, who has directly or indirectly control or significant influence. My subsidiary, my subsidiary, my associate, my subsidiary is associate. 5th, instead of individual, any KMP. Instead of individual, put KMP. And 6th is, if I have got control over here and control or significant influence over here, then these two are related party. One, एक side में control and एक side में significant influence or control. So control, yes. Control, significant influence, yes. Significant influence, no. One student told, sir, significant influence and control are baba same, no. One side there should be control, one side there should be significant influence. Okay. Correct. Who are not related parties? Companies under common director, fellow associates, joint co-venturer, providers of finance, trade unions, franchisers, single customer. All these are not my related parties. Correct? If you have a related party, transaction between related party and those transactions which are to be disclosed, all these transactions, purchase and sale of goods you are supposed to disclose, purchase and sale of fixed assets, rendering of services. So purchase and sale of goods, services and asset, okay. Agency agreement, licensing agreement, lease agreement, all the lease, licensing, agency agreement, all disclose करना होगा. Transfer of research and development, guarantee and collateral, all you are supposed to disclose. So purchase and sale of goods and service, purchase and sale of goods, services and asset, 3 हो गया. Licensing agreement, lease agreement, licensing agreement, lease agreement and agency agreement, 6 हो गया. Yes. Transfer of research and development, okay. Finance or loan के साथ साथ collaterals, guarantee and collaterals. Those are not to be disclosed in case of holding and subsidiary. Intergroup transaction, enterprise which have statutory requirement, they cannot disclose. Bank. Related party relationships of state control, government control entities. P3 means purchase and sale of goods, services and asset. A3, licensing agreement, lease agreement and agency agreement. G, guarantee and collaterals. And management contracts. Transfer of research and development, finance and loans. This should be together. Guarantee and collaterals and finance and loan. Transfer of research and development, management contract. Then it will become easy. Correct? What you are supposed to disclose? Name of related party, description, address, value, amount, everything. Name of related party, description of the nature of the transaction, volume, amount of the transaction, outstanding amount, how much bad provision and how much bad debt and bad debt recovery. Name, description of relation, description of transaction, amount of transaction, money outstanding, provision for doubtful debts, bad debt recovery. So name हो गया, description of relation, description of transaction. Then volume means volume, ठीक है, that is amount of transaction, amount outstanding, PDD, bad debt and bad debt recovery. Correct chartered, yes or no? Yes, sir. So you are done with AS 18. Chartered since I met with an accident yesterday, I am not able to write too much. We'll take 2-3 hours ka break and we'll meet now at 2 o'clock. Am I clear? Thank you so much. Bye-bye. Take care. Thank you.